Hello viewers, welcome back. So this is our 12th video as part of our series of video related to Tally's release 6.1. So starting this video, I'm going to cover yet another enhancements that Tally is brought for the edit log version of Tally EXE, where I'm sure that you are aware all MCA companies should have a software where the software should provide the edit log facility for viewing, and it should not have any option for deleting the edit log. So in this release, Tally is given a better analysis of edit log. So before we go into Tally, the first part of the video, I'm going to cover the fundamentals of the requirement of edit log as a recap for all of us. And subsequent videos in multiple parts, I will cover the features and the configurations that we can apply or techniques we can apply for viewing the edit log information. So let's quickly understand the fundamentals. We will quickly walk through the law, the requirement, and consequences of non compliance as a quick recall. The most important thing we will learn in this video is what was provided earlier about edit log in TallyPrime and what new reporting enhancements are provided in release 6.1, which will enhance the stakeholders' evaluation techniques pretty robustly. So let's quickly walk through the domain aspects of the audit trail or the edit log requirement as per MCA. The audit trail requirements under Companies Act 2013. Under the Companies Act 2013, Rule 3, Sub Rule 1 of the Companies Accounts Rules 2014 has introduced an additional requirement regarding the proper maintenance of books to incorporate an audit trail as an additional requirement to this particular rule. So the Ministry of Corporate Affairs has mandated that from 1st of April 2023, every company in India must use accounting software with the capability of audit trail or edit log feature. The objective of bringing this new rule is to ensure transparency, accountability, and traceability of every transaction or data modification to prevent fraud in financial transactions. What are the key requirements of MCA? So let's quickly walk through the key requirements. A mandatory audit trail. That means all companies must implement and maintain an automated system generated audit trail for all financial transactions generated by the software that they are going to use. Next, edit log creation, which means the software must log every change made to the transaction, including the deletion of transactions, capturing the date, time, user identification, and the changes in the value. If a particular ledger or a voucher is deleted, in case of voucher, what is the amount that was originally captured in the voucher, and after deleting also the audit log should provide the value that was captured in the deleted voucher. Next, edit log integrity. The audit trail generated by the system should be tamper proof, meaning it cannot be altered or disabled and must remain operational throughout the financial year or throughout the time when they are capturing the data of their company. Next, retention period. How long it has to be retained? The audit log record must be retained for a duration specified by MCA. Generally, this duration is aligned with the statutory record keeping period. The next, applicability. So for whom is this Audit Trail or edit log is applicable. This requirement covers all companies regardless of size, nature or sector using accounting software to maintain their book. That means all the companies registered under MCA, all private limited companies and public limited companies fall under this rule. Monitoring and reporting aspect, a chronological time-stamped record of what was changed, when, by whom, and the previous values of each transactions and data update, which I had just mentioned. Companies must regularly monitor their audit trail and be able to produce comprehensive audit trail report for regulatory review or during audits. What are the implications of non-compliance? Penalties for failure to implement. Failure to implement and maintain an audit trail as required can lead to penalties ranging from rupees 50,000 to 5 lakh. Companies must ensure their accounting software complies with all MCA requirements to avoid these significant financial penalties. Now let's quickly walk through the feature comparison of release 6.1 versus the release 6.0, which Tally has already provided the edit log, and what changes or what enhancements has been brought in release 6.1. So this is the comparative analysis of key information as per the requirement of MCA with regards to edit log. The first is maintaining log for masters and transactions related modification. It has been there and it continues to be there. Number of edit log version history supported. It is unlimited in earlier and now. Bulk report filtration for altered, non-altered and deletion of masters and vouchers. We had this facility to filter this report. Now comes the new enhancements. Voucher wise and master wise summary, count and version. Earlier it was not there. Now we have voucher wise count of modification or deletion as a dashboard report. User wise master voucher summary, again count and version. Version is basically how many times a particular master or voucher has been altered. Next one, filtering the edit log report based on the activities. So based on the type of activity, you can now filter, which was not available earlier. Filtering out the logs made due to BRS, e-invoice and e-way bill. See, generally what happens that in Tally, whenever you are recalling a saved voucher and if you are saving it even without making any changes, Tally will treat that as an altered voucher. You recall and resave it. Similarly, when you recall a saved voucher for conducting a bank reconciliation and when you enter the bank date, it becomes an alteration of the voucher. The next one, when you're generating e-invoice, again it becomes alteration of voucher because Tally is going to pull the QR code and the 64-digit IRN and place it in Tally's sales voucher or the tax invoice. So again it's an alteration. Similarly, the e-way bill. Now you have an option to filter out because these are not a case of exception or fraud. So you now have this option where you can filter out these logs of BRS, e-invoice, e-way bill, and also in case companies where they are conducting the synchronization. So that's the new feature that has been provided. Filtering backdated master voucher modified in the future date period. Now this is again a very powerful report Tally is introduced. That is, after you have finalized your financial year for let us say 24-25 and you are continuing with the data for the current year. Now you can see as on date, as on current year date or as on today, you can apply a filter and see as on today, has there been any modification to your finalized books of account of the vouchers or masters of the previous financial year. It's a very useful report, especially for the auditors. Let's quickly summarize the audit trail. requirements. What are the key takeaways? MC has mandated audit trail capabilities in accounting software from 1st of April 2023. All companies in India must comply regardless of size or sector. Our Tally Release 6.1 offers significant enhancements over previous versions. New features include user-wise summaries, activity-based filtering, and filtering of backdated entry detection. Non-compliance can result in penalties from 50,000 to 5 lakhs. Implementing software with robust audit trail capabilities is essential for maintaining transparency, accountability, and regulatory compliance. In the next part of the video, we will now go to Tally and then experience this new audit trail features. I hope the brief recap of the edit log requirement and also important thing that we saw what was previously available before 6.1 about the edit log information that you are going to view and what enhancements have been brought in 6.1 so that it becomes more robust in identifying the corrections or changes that have been done by the different users in Tally. So thank you all once again for staying till the end. See you all in the next session. Thank you very much.